Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Thursday, January 9th, 2020. Tell you, I got a lot of stuff to go over. The market keeps moving higher despite a lot of tensions over in the Middle East. The market seems to just have its head down. Go through a bunch of this. You can see the agenda there, but we'll go through the daily market recap in just a couple minutes. Talking technically, today I want to go into a financial industry group and point out how it's just making a breakout, and a number of these groups, after they make the breakout, continue pushing higher. This is one to keep an eye on. We'll get into that in just a few minutes. Earnings spotlight. Our earnings starting to creep back in to the news. We've got a few companies reporting. Of course, next week, things will start to pick up even more, and then the second half of January really picks up. Upgrades and downgrades. Got big semiconductor stock upgraded this morning. Talk about that. Scooter movers. There are a couple of different ways to look at it, but I'm going to show you how to look at some of the small caps that are starting to show some strength in their scooters. And then we'll end the show today with the three you must see. Always finish with that. And those just represent three stocks that I really think you need to take a look at the chart. Something's going on. All right. I do want to point out at Earnings Beats, we do have a big event coming up on Monday, January 13th. Today is Thursday, so we've got a few days. But it is the January effect and top 15 stocks for 2020. Those of you who are new, maybe haven't followed me for a long time, I've been following the January effect pretty much since I got in and started analyzing the stock market. There is an amazing connection between performance in the S&P 500 during January and the performance of the S&P 500 during the balance of the year, not including January. I've had people talk to me, well, if January is a big month, no, of course you're going to have a big big year because January was big. The key here, the takeaway, is that it's the balance of the year. It's ignoring January. So if you have a big month, a big January, the tendency is starting February 1st, you have a very strong balance of the year. And I've got the numbers to back all that up. I'm going to go over that on Monday. And then, of course, top 15 stocks for 2020. These are stocks actually shared at Market Vision 2020. I've shared them with Earnings Beats members, and I want to go over the charts and annotate them and show you exactly what I'm looking at there. So if you'd like to join me, I will show you exactly what you do. You just come in to earningsbeats.com. While you're there, subscribe to our free Earnings Beats Digest newsletter. I mean, that's a no-brainer. 3 times a week, I talk about relative strength earnings. There's no credit card required. Just come in and learn a little bit about relative strength, how we look at the market. But what I want to do is show you at the top on one of the tabs is an event calendar. If you go in there, you will see a list of things that we have coming up, mostly Trading Places Live events that we also do over at Earnings Beats. But you will also see on Monday, January 13th, this January effect, top 2020 stock picks. And then if you click on that, you can go down here and you can sign up for the $7 30-day trial. And actually, if you do that, we're about to start a special where you get $7 refunded. So literally, you're signing up and then you're getting your money back. So it's going to be a free sign up for a 30-day trial. That will include the January effect. And then also it will include, because there's 30 days in the trial, the sneak preview Q4 earnings, which is public, and then another members event talking about the Q4 earnings later on January 27th. So a few really big events coming up. Make sure you sign up for all of that. Again, go to earningsbeats.com, click on the event calendar tab, and then just simply come in here. If you're interested, click here, sign up for the $7 30-day trial. Make sure you get it refunded. Okay, let's go ahead into the recap from yesterday. So the daily market recap. We did see a really strong day. Markets didn't quite close on their highs, but we did set new highs on both the S&P 500 intraday, clearing the prior high at the beginning of the year, and the NASDAQ intraday and also on the close set new all-time highs. Small caps rallied a little bit, but underperformed on a relative basis, sitting right about its 20-day moving average. 10-year Treasury yield, you can see here, moving up. Yesterday was a pretty strong day, continuing to push a little higher today. And I see equal highs and rising lows, ascending triangle. Tomorrow morning, non-farm payrolls comes out. That usually has a big impact on the bond market and the direction of these different yields. So I would be watching that, a strong non-farm payrolls report and a breakout on this yield above 1.95%. And I'm telling you, the rally that we've been seeing, I know everybody's waiting for a pullback, but if we get a breakout in the 10-year Treasury yield, I don't think that pullback's coming anytime soon. Technology had a strong day yesterday, up over 1%. Communication services up almost 0.75%. You can see both of these in very clear uptrends. Financial administration stocks within the financial sector broke out yesterday. We'll talk about that a little bit more in just a bit. Energy was weak yesterday. You can see the drop back to the 20-day moving average. Check out oil. Oil was all over the place yesterday. A lot of volatility with all the tensions in the Middle East. It had spiked early in the day up over $65 a barrel, was all the way back down close to $59 a barrel and closed in the 59s, down almost 5%. That put pressure not only on the XLE, but many energy stocks and commodities in general. Let's take a look at the 10-year Treasury yield. Now, I did mention that we will be getting the non-farm payrolls report out tomorrow. This morning, we got initial jobless claims. They came in a little better than expected, 214,000 versus 219,000. Let me get a quick update, make sure we got the latest here. And you can see right now we're at 1.89%. That's up 2 basis points. And this week has been a steady march higher since we were down around 1.77%. Seems like we're moving up right into this non-farm payrolls report. If you didn't see it, the ADP employment report yesterday came in much, much stronger than expected. And also the prior month's jobs were revised much higher. So we had the December jobs come in much stronger than expected. And then November was raised. And I believe the revision was almost a double of what had previously been reported. So it was not small. And so we've got all of that leading into a big non-farm payrolls report tomorrow. All right, let's move on to talking technically. And what I want to look at here today, I've talked about internet stocks, I think, back on Tuesday. Today, I'm going to focus on financial administration stocks. But the first thing I wanted to point out was the financial group as a whole, the XLF relative to the S&P 500. And how we had broken this downtrend that had been in play for more than a year. We're now starting to move higher. You can see that the relative PPO is in positive territory. And here over about the last 3 to 4 weeks, we have pulled back. And I think this is presenting an opportunity, especially, again, if we get a big number out of the non-farm payrolls tomorrow and we get a breakout on the 10-year Treasury yield, that, I believe, is going to be the catalyst for another strong move up in the relative performance of financials. So areas like banks, investment services, asset managers, those types of areas I would expect to do very well. And I think financial administration, which I'll get into in just a minute, could do very well also. Here is the financial group on an absolute basis. So while we have been pulling back on a relative basis, we're not really losing any ground. It's just that the S&P has gone higher. And so on a relative basis, we have seen a little bit of pullback here. But financials have actually moved up over the past 30 days, and that's with a challenging 10-year Treasury yield environment where we've actually pulled back from 195 to the beginning of the week. Like I said, we were down to around 177. That normally spells trouble for financials, and it hasn't. That tells me something. It tells me financials are likely to continue moving higher, and if we get that breakout in the 10-year Treasury yield, this is a group you certainly want to have exposure to. All in my opinion, of course. All right, let's move on. Let's take a look at the, I'm going to pull up that financial administration chart. And here is, look at all this consolidation and then the breakout. I'm going to pull this up on a weekly chart. This is a 5-year weekly chart. And here was a big move up for a few years. We had the pullback, and then we had another big surge, and now we've been consolidating this. You know, I could see an inverse head and shoulder, top, left shoulder, left side of the neckline, lower low puts in the head, right side of the neckline. Here's a drop back to the 20-week moving average. That's your inverse right shoulder, and now we're making a breakout. That is a bullish pattern. If we take a look, and I'm going to go, let me go back over to this relative strength. No, let me go with the relative strength industry groups. And let's go down and let's take a look at Not sure if this is going to be the best way to show it. Let's look at a couple of groups here. Probably can look at it down here. Yeah, okay, so consumer finance. You see how we made the move up into July and then we went sideways here for a few months and then we made the breakout. And when we made the breakout, look at that continuing push to the upside. Let's see if some others have the same thing. All right, investment services. So here's the absolute chart, making a move off the bottom, sideways consolidation. We make the breakout and look at it take off. Let's see if there's any others in here. Well, this one's still consolidating. So this is the full line insurance. Let's take a look at the banks. Wow, banks, look at this consolidation. So it moves up, long consolidation, we break out. You see it stopping? Once it breaks out, that usually is the catalyst for a much bigger move to the upside. So when I look at that, and then look at the financial administration stocks, now I see this sideways consolidation, and we're just getting this breakout. So this is a group that I really want to pay attention to. Now, looking at it on a relative basis, I can understand where there might be a little bit more consternation. I mean, we've got uptrend, but over the course of the last few months, we've had a downtrend. I don't think this downtrend is much different than we saw in the fourth quarter of 2018. I think overall, we have a long-term uptrend in play. As we kept pushing higher in terms of relative price action, notice the relative momentum was dropping. So we had a negative divergence. I think that was calling for a pullback. We had almost the exact same thing last year. Higher relative price action, lower relative momentum, pullback, and then we take off again. Watch this, because now that we're getting the price breakout down here, if we get this relative price breakout back above these moving averages, that would really be a positive sign. So this is something to keep in mind and watch for. So as you look at financial administration, you say, okay, great. Financial administration is an area I may want to take a look at or at least monitor for a while. Might want to play this breakout, but if, worst case, maybe watch for a little bit longer to see if the relative strength picks up. But what do I do with it? Well, if you come over to, and I use this page so much, this tool, the scooter reports, and I've shown this before. I did it back on Tuesday with internet stocks. If you go into large cap, I mean, you can switch this to mid cap, small cap, but let's go ahead and just stick right now with large cap. Type in financial administration. And there you have the two stocks in scooter order. Now, Jack Henry, JKHY, only a 34 scooter. Probably not the best one out there, but let's take a look at it and see what it looks like. All right, so it's been moving higher. Nice little, maybe a cup. Handle's a little long and extended. But anyway, overall trend is clearly higher. Higher highs, higher lows. So I think if the stock makes break back up above 148, probably heading toward that 152 level to challenge that. We could always pull up the weekly chart, see what's going on here. Beautiful move up. It's been in this consolidation for a while, but it's got a nice uptrend in play. So even though the scooter, keep in mind, and I try to point this out a lot, scooter is a great relative strength tool, but like any other technical analysis tool, it has its limitations. And for me, that limitation is really the fact that if you look at the calculation, it only goes back about 5 months. Just about anything you look at in the calculation goes back 5, maybe 6 months. So the problem is that when you see a stock like this, yes, it's gone up over the last 5 or 6 months, but if you look at what the market's done and what many other stocks and areas of the market have done, JKHY has been going up, but it's not been going up as fast. So it has a lower scooter. But then again, when we pull up that weekly chart, you can see a much different picture. A stock that's been doing a little consolidation, but on a weekly basis now seems to be riding up above that 20-week moving average. A breakout would be very bullish, even though the scooter at this point is only 34. ADS, I can tell you, Alliance, this is not a stock I would have any interest in whatsoever. I talked about this one a long, long time ago when financial administration stocks were strong, and I said, stay the heck away from this. As long as you see relative strength like this, not showing any signs of life relative to its peers, I'd stay away from the stock. Wall Street's telling you, stay away. Look at the big volume drops. Saw it back in August, saw it again late October. Stay away. Let's go over to the scooter report again. Let's go to the mid cap. So the mid cap, you can see WEX, the highest scooter at 49. Square starting to show some strength. I'll pull that chart up for you in just a minute. Here is what I think is a pretty good breakout. Now we got to clear 220, 221, but look at this trend line. If you connect these highs coming down, we definitely have seen movement to the upside. Volume not really confirming it though. So maybe just a little bit more consolidation. This doesn't look like a bad chart. It just looks like a consolidating basing chart, which can be a very bullish thing when we get a breakout. So watch that 221 level. Square, I mentioned Square. You know, we went back down to this area. I noticed this huge volume coming up here, and this was an earnings report. This is actually a stock in our value portfolio at Earnings Beats. And the value portfolio isn't the old-fashioned way of looking at value. It's not. I'm not looking at Square as being a value stock because it's trading at a very low multiple of earnings, or that it's trading close to book value or anything like that. Value, in my mind, technical value, is when a stock's been downtrending and then it starts to show signs that it's reversing the downtrend. So it's been not a great stock to look at, and now it's all of a sudden turning into a better stock to look at. That to me is a value from a technical perspective. So, you know, instead of chasing stocks, think of it that way. Instead of chasing stocks that have been going up for months and months, now we have a stock that looks like it's trying to make a reversal. So here we make that reversal. We went down. I actually told our Earnings Beats members last week, over the weekend, that if this stock closes below 60, I'd be out of it. I wouldn't even pay attention to it anymore. After the earnings, its low was about 60.5. And notice where it just turned from recently, stepping back up, breaking out. Huge day the last couple of days. Breakout above $70 would really start to look good for Square here. All right, and the last one I want to just pull up quickly here, small caps. Now we're talking about stocks, some of the small cap stocks in the space that look much better. And again, we're talking about the last 5 months, 6 months. That's about as far as you can go back when you're looking at scooters. Let's pull up Cardtronics, and I think you'll begin to see the difference here in these charts. Beautiful move up here, $29 to $43. I think we're doing a little bit of consolidating, a little basing, higher price, lower PPO. Maybe we get this 50-day test. I'd be okay as long as it holds about $39.75 to $40. Every, this is one that I really like. Let's pull this one up and take a look. Similar type of chart, beautiful move up, $8 to about 13.5. Higher prices, lower PPO, so maybe sideways consolidation. That's exactly what we've gotten. Volume's been light. I think the stock's going to make another breakout. I think it's just a matter of time. So again, if financial administration stocks begin to roll, these are areas you want to be thinking about. All right, let's move on to earnings spotlight. We are starting to get some earnings coming out. First one I wanted to point out, Helen of Troy, HELE. This is a stock that has been a really, really strong performer. It's been gapping up with earnings. It's going to do it again today. The stock, at least as of about a half hour ago, was up 5.75% in pre-market, continuing to push higher. It's overbought. I'd probably have to wait to see if I get it on a pullback, but it would definitely be on a watch list of mine. Check out the relative strength the last couple of months. Overall, really, for the last year, you got a strong stock among its peers. It's made the breakout, heavy volume. I think the overall pattern here looks good, and it continues to be a hold, in my opinion. BBBY, in my Earnings Beats Digest article yesterday, that's the free newsletter that I have. I sent this out to members. And you look at this chart, and what I pointed out is that Wall Street was expecting good news out of this company. We had a nice report back in October that the top of gap support held. We kept moving to new highs. Look at the relative strength versus the specialty retailers. I was thinking, okay, maybe this is finally going to be the time when we reverse what has been an absolutely, it's been a disaster for Bed Bath & Beyond for the past 5 years. We put a double top in at $70, $71. We have been on this downtrend since. Looks like maybe a bottoming head and shoulder pattern, left shoulder, neckline, head, right side of the neckline. Maybe it comes back one more time for the right shoulder. But breaking out above 18 would have been a really big deal. They came up so far short on their earnings and revenues, not even close. The stock's down 12% pre-market action. They suspended their full year guidance, and now they're saying they're going to reveal a new strategic vision sometime early in 2020. So if we go back to that daily chart, And I'm looking at this and I don't see, with the exception maybe yesterday, I don't really see any big volume selling taking place anywhere through here. I think they just dropped a bomb on Wall Street. I don't like companies that do that. So this is one of those that I would probably avoid for quite some time. Some other companies that are reporting or have just reported. SMPL, this is a Simply Good Foods company. The stock did beat bottom line, 22 cents versus 21. I didn't see the revenues. Stock is down almost 5% pre-market, and it has been starting to weaken over the past several months in relative strength, so I'd be a little careful. Looks to me like it's ready to roll over a little bit further. All right, let's move on to upgrades and downgrades. Big Semi got upgraded this morning. Advanced Micro Device has been a great performer. Stock was upgraded. I cannot disagree with this upgrade. I mean, looking at this chart, this was a chart that actually, I think on October 8th, I sent out to members. Look at it, right on support, and said, if you're ever going to take a shot with AMD, this is the time to do it. Stock went from 28 up to 48. It's just been the last 3 months or so. But price support matters. Hammers matter. See that hammer right there with the tail that goes down below price support? That's accumulation to me. So anytime you see something like that on a stock that's been a very strong performer in a very strong area of the market, that's when you want to be thinking about taking a shot with minimal risk. And that's what buying at support does, minimal risk. Another upgrade today is Chipotle. Chipotle is in my model portfolio. It's been a great performer. It's really rallied back nicely since the announcement on February 19th. That's when I announced the latest stocks in the portfolios, and Chipotle has been one of the better performers, continuing to rise up. Restaurants starting to gain strength again. That's another important variable for Chipotle. We already know it's a leader. Here, it just broke out to a 52-week high relative to restaurants. What we needed was restaurants start picking up. Now we're seeing that. I agree with this upgrade. Downgrade today, Tesla. Tesla has been absolutely on fire. This is somebody downgrading probably, well, I didn't look at it, but I'm assuming it's valuation because of the huge rally. But when you get a stock that makes a breakout, and I said this 2 weeks ago, when you get a breakout above a massive long-term resistance level like we saw here with Tesla, that is usually a really good sign. When you base for 2 years and finally make that breakout, that's normally a good sign. That's what we're seeing here. I disagree with this downgrade. Sure, we may get a pullback in the near term. I think it's an opportunity, though. All right, let's move on to scooter movers. And what I want to do with scooter movers is I've gone back to that same report I showed you earlier. I'll walk you through it just in case you came in a little late today. But if you go over to under the member tools and you click on scooter reports, and then you go to small caps, I'm going to focus on small cap movers here. Here you've got it in scooter order. But what you can do is simply click on the change, and it'll tell you what stocks fell the most yesterday. And if you go over here and click 1 week, it'll tell you which stocks have fallen the most in scooter score over the last week, which can be very important. But I'm going to focus on the strength. So here are the stocks, and I'm going to go back to the daily. Here are the stocks that moved yesterday the most in terms of their scooter score among the small caps. And as I look at this, some of these I would look over here at the volume. And I see 68,000 shares. That's not going to interest me. In fact, if I don't see at least 200,000 to 300,000 shares, I'm not even going to be interested. The other thing I'm probably not going to be interested in is a dollar stock. That's just not my style. I know a lot of you probably do like to trade those highly volatile small stocks. And if we pull this one up, you will see that that is a pretty big breakout. But we saw this back in June, a pretty big breakout, and look what happened afterwards. These small stocks can be very volatile. I do like the big move on volume, consolidation, and another move. But if I was going to get it, it would probably have to be back in the 140s. I'd have to wait on a pullback. It's just not my style to chase, especially these small biotech stocks. Look at all the biotechs that are in here. There's so many small biotech companies that it litters these various scooter lists when you look at the small caps. A stock I do think looks pretty interesting, though, and I pointed this out to members at Earnings Beats. Here's a big break to the upside, and it tried to make the breakout yesterday. It was up to 10, and then it came through and just kind of stopped there. But with this increasing volume on this move, I think it's going to go and probably hit the top of this gap resistance, which is up around 1060. That's another 8-9% from where we are now. I would not be surprised to see a move up there. So, looking at the scooter mover list, and I think just gives us an opportunity to find some stocks that maybe we would not otherwise have focused on. So maybe come down here. CLVS is one I know I'd been watching. This is another biotech stock. Look at this move right off the 50-day moving average. That's a huge move. I see a bull move and a wedge. If you connect the highs, connect these two lows, it's a squeezing piece of pie. Watch today. This could be a breakout, a quick move back up to test these recent highs. But again, it is a crazy, wild, and volatile stock. So only trade something like this if you've got the stomach made of steel. All right, let's go ahead and move on. And we're going to go into the final area, which is the 3 you must see. First stock I want to pull up. This stock actually looks to me like it's breaking down. MKTX, I saw a nice uptrend. I saw a pullback. Nice rally, trying to move back up. Where's the volume? And there was almost no volume here. Now it's starting to roll back over again. And I'm going to pull up the relative chart here. Because if you see the relative strength, see how that's rolling over? We were in a much better position on a relative basis 4 or 5 months ago. And now with the group going up, this is a stock rolling over. I could annotate this real quick. And this is in the investment services space. But if I take this from here and just kind of draw along, see the trend line? And you see that break right there? Look at the volume picking up, relative strength getting weaker and weaker. I don't know, this one doesn't look very good to me. So, if I was owning this and I really thought that, hey, we're in a cup or something like that, that would bother me. That would be a signal for me not to take any further risk and just get out. All right, next one up, FireEye. FEYE. This is in the software space, security stock. I really like the volume that came in recently on that. That is really nice action. 3 white soldiers, nice bullish candle pattern. Took out this high. Now we had a rough day yesterday and pulled back. I suspect that it's going to hold at the 20-day moving average. This is another one. I mean, it was 16.5. It was almost 18.5. Now it's 17.25. It's moving around very volatilely, very rapidly. So you want to make sure that you're okay to stomach that kind of volatility. But I suspect the 20-day moving average is going to be an area where we could look for a reversal. If it does fail there, I would be shocked if this stock goes back down below 16. Now, after seeing the volume come in this kind of a move, I would be shocked if it went back down below 16. So I would actually be using 16s as maybe an accumulation if you like FireEye. Last one I have for today is Splunk. Not only do I just love that name, Splunk, and I remember talking about this on Market Watchers Live with Aaron Swenlin, and when it was going down, I was talking about maybe the name should be Splat instead of Splunk. Well, now it's got its Splunk going again. Beautiful move up back in November, pulls back, hits that 20-day, moves back up, equal highs, pulls back, hits the 20-day. You've got an ascending triangle that breaks out here over the last couple of days. Volume starting to pick up. Measurement initially is up to about 163, 164. I think we're going to make it. So Splunk would be my final stock of the 3 you must see. Again, got a big event coming up on Monday over at Earnings Beats. So you can go to the event calendar there. Make sure you click on it, get registered, sign up as a Earnings Beats member. Would love to see you. Everybody have a great day and be back on Tuesday. Happy trading.